Ladies and gentlemen, just like that, we are back. Stocks are rallying, crypto is pumping, and market liquidity is coming back into the market. QT is over, rate cuts are coming as the market adjusts to December seasonals. But is this a bull trap? Should we lean into this rally or take some off the table? That's what we're going to talk about today as we dissect the news and the charts that brought us here. Now, there are some good charts and there are some very concerning charts. Either way, sit back, get ready for the alpha. We've got a lot to talk about. Let's roll the tape.
Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it.
This is the daily heat map of the S&P 500 and US stocks stepped higher on Tuesday on track for a comeback after a fragile start to December that saw sharp losses on Wall Street and in crypto. And we really did see a bit of a bounce back after what was a pretty ugly start, specifically in the crypto space here for the market. We saw a lot of big news in the tech space, in the AI space, and this is really the sector that really just makes headlines pretty much every single day. You can see right here that's all of these big names, excluding Tesla, which was down 1.3%, and then AVGO, which is also down about 1%, were actually very green. Palantir, Microsoft, Nvidia, Apple, Google, Meta, Amazon, the entire software space, the hardware space, Nvidia itself was also up just shy of 1%. Very solid price action in the entire tech trade. And then everything else was kind of mixed. We saw industrials, in the green as well. Financials, some winners, some losers, and a lot of the other sectors were red. Really what we saw was a rotation from the broader market into, kind of just tech names, industrials. More sectors actually did fall today. So breadth wasn't that great, but the S&P 500 was actually in the green. And that's because XLK and XLC, these are the tech sectors, gained 0.43 and 1.07% respectively. Industrials was up there. That's a fairly big sector. And then we had financials gain as well. Financials, the second biggest sector in the market next to technology. And then every other sector was green. Gold fell 1%. So you definitely did see some risk on sentiment, I guess. But yeah, what we really ultimately saw was a rotation from the broad market into the tech trade. And that's because we had some pretty big news on that front. And we'll talk about it a little bit later on. When we look at the factor analysis, you can see that large cap growth, essentially just, tech names, big tech names, was the best performer, up 0.7%. Value really took it on the chin. Here, the value chain across the board, small, mid, large, was actually red. What was also red was mid cap core. But then everything else was green. Growth was green through and through in mid caps and small caps. We saw large cap core outperform as well as small cap core. But really today was just a day for growth as the market continues to have very seasonal tailwinds in the market. Now, I don't think the economic data actually moved the market at all. The economic data was all right. I mean, we got the Red Book Index. This is just a weekly aggregate of retail sales up 7.6%. But this is actually what you kind of want to see this time of year with Black Friday, Cyber Monday, all those sales coming through right now, especially with like Halloween just having passed. And as we go into this holiday season, you want to see strength in this number. If not, that can be a little bit of a red flag. Total vehicle sales, we actually didn't get the number right here. Very, very interesting. And that was really it. There wasn't really much of anything apart from the fact that, consumers looking really good. And we actually saw a step up from last week. Now, Donald Trump made quite a bit of headlines. He came out and he said his new Fed chair will be announced early next year. So we're looking January, sometime around there. We'll get who the new Fed chair will be. US Treasury Secretary Scott Bessent in the same conference came out and said there will be substantial tax refunds coming in Q1 2026. And I think that's part of the reason why we did see markets bounce a little bit here today, especially very early on. And pretty much, guys, rate cuts, tax refunds, and stimulus checks are on the way. This is what this administration is going to do. In the same conference, SEC Chair Paul Atkins came out and told the New York Stock Exchange that he wants to make IPOs great again. He outlined how the agency will work to lighten public disclosure requirements for smaller and newer companies in an effort to bring more of them to the public market. A company, he said, with a $250 million market cap must file the same public disclosures as a firm 100 times the size. That burden, he argued, has contributed to roughly 40% drop in the number of public companies since the mid-90s. And I agree, if you deregulate disclosure, sure, it might mean there's less transparency, but we're going to see more more of these companies come to market, and then you can always, up the transparency as these companies do get bigger. But talking about the tech trade, this really did move the markets today. Sam Altman has issued an urgent memo to his employees to accelerate key improvements in ChatGPT as competition intensifies from rival AI developers like Google and Anthropic. Sam Altman told his staff that it's critical that as it faces intense competition from Google's new Gemini 3, which is great, by the way. I was using Gemini 3. It is actually awesome. Then Nano Banana, which is the image generator, is also really, really good. And Sam Altman really feeling the heat, but this is what capitalism is built on. It's built on competition, and it just means that the competition ramps up and pushes forward. And this is the rising tide that lifts all boats. On the back of this news, Nvidia was up about 1%, and this also came after news that the CFO, Colette Kress, said the company has yet to finalize the $100 billion investment in OpenAI. Kress's comments came as investors began to scrutinize a tangle of artificial investments that to some appear dangerously circular, and after OpenAI CEO Sam Altman warned employees that the company is facing code red regarding the competition. Now, Nvidia did pair some of these gains, but was still up for the day. Boeing was up 9% after the plane maker's CFO said the company expects positive free cash flow in 2026 in the low single-digit billions of dollars. Investors cheered the improving cash flow development after the company burned $2 billion in 2025. Boeing's stock absolutely soaring on the back of this, and it might even go to like 220 on the back of this news. And then we had some software earnings yesterday. MongoDB and Credo Technology were up 25 and 13% respectively. Both companies beat on the top line, beat on the bottom line, saw margins improved, raised their guidance. It was just stellar quarters here. And these software companies are telling us that on the software side, the AI trade is still very much alive. And then again, with AI, Intel Corporation was up 7% on Tuesday, hitting a 52-week high as rumors are swelling that the company could begin supplying chips to Apple in as little as 18 to 24 months. And then for everything we saw today, guys, there was 3,000 advances, 3,200 declines. So market breadth actually not bad at all. Half and half. We saw outflows in the New York Stock Exchange and the Nasdaq. But again, if you measure the gap up, it was actually inflows. The S&P 500, you see very, very choppy, very choppy year on the day. But so far, green for the day. The market is still open, but momentum beginning to look a little bit weird. Yesterday, things were really good, right? But when you look under the hood, we lost the 50-day, we lost the 100-day, these medium-term averages, right? The 5-day as well. But when you look at the longer-term averages, the 150, 200-day, we're still holding these. And this means the long-term trend is intact. And ultimately, as investors on this channel, this is what we are looking for. We're looking for the longer-term trend to capture those big, outsized alpha moves and outperform the market. But let's hop on the chart. Now, looking at the charts right here, the Nasdaq is the clear-cut winner, undoubtedly. Russell 2000 there as well, along with the S&P 500. But the Nasdaq, you can see up just shy of 1% right there. Mid-caps in the RSP, flat. Not a bad day, but not a super great day as well. Really just a day for the large caps and the small caps and nothing in between. You can see a growth outperforming value, but value is still slightly in the green. Just a flat day here for value. You can see internationally, very mixed day. Europe is flat. Middle Eastern stocks up in a very big way. That probably has to do with some of the movement we're seeing in oil. And then KWEB, China stocks down 1.37%, India stocks down. And guys, look at this. Crypto absolutely pumping. Bitcoin up 6%, Ethereum up 8%, Solana up 10%. Absolutely massive moves. I think the market's saying, hey, some of these cryptocurrencies look cheap relative to maybe equities, especially on a performance return basis year to date. And we're going to start allocating here. And that is actually what we saw. You know, we've been bullish in crypto, retaking key levels, 92K, Ethereum 3000, Solana at the 140 level. Absolutely key levels are being reached, and this can definitely go higher. This is the type of momentum that sends crypto much higher. We'll talk about it. Volatility, the VIX continues to move lower. We literally went from 25 like 4 or 5 days ago, 2-3 weeks ago, to where we are right now, 16. Yields fell ever so slightly. The 10-year and 2-year yield did fall. Dollar was roughly flat. TLT treasuries did gain ever so slightly, and gold, guys, look at gold down 0.94%, but silver up, and then crude up down 1.05%. Now, let's hop on the daily chart here for the S&P 500. And you can see what almost looks like a very mini V bottom has been formed here on the daily chart. You could see the S&P 500 put in an all-time high right here. And then, we had a number of catalysts that made the market go lower, mostly as it pertains to rate cuts. But we formed an equal low right here. We put in a bottom, and now we are rallying, digesting this move, as you can see right there at the 6,800 level. Ultimately, we want to see this resolve higher, and I do think it will, especially as we get seasonal tailwinds in the market. But we can see a little bit of digestion here through this week, especially through the first half of December, which tends to be pretty flat. A lot of the big seasonal gains in December come in the back half of the year, so nothing to worry about. I know these look like doji shooting star candles, but candlestick patterns don't really matter much. Ultimately, what matters is the fundamentals, and we put in an equal low right here, and it's off to the races. I think as long as we put in a higher low relative to this low, even if we do come down a bit, as long as we put in a higher low, I do think the market probably will resolve to the upside in the S&P 500. Very similar situation for the Nasdaq 100. Even if we do come down, I do think we probably resolve a little bit higher as the market continues to move, as long as we put in a low that's equal to that. And there's some very seasonal patterns. So you guys know I was saying buy the dip right here, and we've been saying buy the dip all year, and this is where we are right now. And I do think we're going to go high into 2025, especially with earnings, rate cuts of the table, margins expanding, the AI trade. I think ultimately you want to hold assets. You want to hold assets, and the best assets to hold right now are US equities. But I wouldn't discount the fact that it's also probably good to hold some European equities, so you could diversify, maybe even some Middle Eastern equities, right? I mean, look at the Middle Eastern ETF looking really, really good. Higher highs, higher lows into all-time highs. This is ultimately where you want to buy. If we can get another pullback here to the 3 level, I'll look for that to simply move higher. Although a lot of commodity exposure in an ETF like this. When you look at China, China does look like it's actually like breaking down right here. This chart doesn't actually look too good compared to something like the S&P 500, right? It looks starkly different. So yeah, if you are looking for exposure, maybe look at Europe, look at the Middle East, and definitely US stocks. That's probably where I want to be. I'd also probably look at stuff like the Russell 2000, right? I mean, if we go ahead and break these all-time highs, it's been price discovery, and you could see 3,000 Russell 3000 in that instance, especially if we do get those rate cuts next week. Now let's talk about crypto, because crypto sort of seeing a big bounce, putting in a higher low relative to the low we made right here. This is actually something I spoke about yesterday. I said crypto normally has a bit of a move. If we look at the weekly chart, right, compared to what we did last week, crypto has a big fall, then it has a retest, a double bottom, and then it makes a move. And that's exactly the type of price action we're seeing right now. We've had a move into these lows, a retest, and now we're putting in a double bottom, a higher low, actually not a double bottom, so a higher low, and it does look like we probably are going to go higher. This is an extremely bullish candle. What we do need to do is go ahead and retake this level, the 93,155 level. If we can go ahead, close above this level, it then opens up these highs right here at 108, and then we can start targeting the 100,000 level and go from there. Very, very bullish momentum here from Bitcoin, from Ethereum as well. Super stuff. Higher low relative to this low, and ultimately if we can continue to push higher into the overnight session, into the end of the week, start targeting some of these key levels right here at the 3,600, 3,500, 3,700 area for Ethereum. So very, very bullish on crypto. And I think, the crypto market is probably trying to find a bottom right here, especially because there's a ton of catalysts. Liquidity is coming back into the market, and it's looking to find its way into the market. And the best way to play the crypto industry is with Bitcoin and Ethereum. Now, quickly looking at gold. Gold was down 1%. We'll see what happens right here. This is looking very, very constructive. If gold can hold this low right here, right, it could probably then put in a higher low and continue the move to the upside to retake these all-time highs. But my base case for gold over the next couple of months is probably just get to digest, this massive move to the upside, and then continue to move to the upside. That's my base case for gold. Very, very similar to what we saw right here, right? Big digestion period, and then we're going to resolve to the upside for gold. For silver, I've no idea. I think silver is actually squeezing. That's an all-time high for silver. I do think we're going to pull back, but I think if we can get to the 41 area or the 45 area, somewhere around here, this is a great buying opportunity for silver in the very long term, somewhere around here, the 42 to 45 area. If you can get an allocation in here, silver might go to $60 or $70 in 2026. And I am bullish on gold. I am bullish on silver. I'm bullish on crypto, and I'm bullish on risk assets as a whole. Anything that's an asset that'll protect against the debasement of your currency, right? Because exponential money supply growth means exponential debt growth, and that's all the market is doing right now. If you look in individual equities, though, I do like APLD. Another very strong day for APLD, up 2.87%. We were big buyers here at $20 mark. It's hitting the $30 mark, and I do think we probably are going to go see those all-time highs sooner rather than later. I sold some calls on my position, some covered calls, collecting some premium, and we'll see where this takes us next. But a very strong move here from APLD. Another name that I really do like is Lemonade, LMND. Now, Stocks down 4.58%. I actually did sell some cash secured puts here at the $65 area. It's sort of where we gapped up. I think we're going to hold this area and move higher from there. Earnings were really, really good, and this company is growing like 30% per year. And management team says they're going to grow another 30% next year. So I do think this is the place where you want to be. In terms of AI software, I really do like Path. Now, they are reporting their earnings after the bell. They were up 3% here today. But if they report a good earnings report like MongoDB did, right, I mean, you could really see this move, and if to the upside. But we'll see what happens with their earnings after the bell. I'll report on it in tomorrow's video. So those are the names that I do like. You also know that I'm a big believer in NVIDIA. NVIDIA, if we take a peak to trough move, right, for a peak to where it is right now, it's still about 15% off its highs. This is a great place, and I do think we're probably going to visit the 200 area sooner rather than later for NVIDIA. So if you're looking for a mega cap, I do like NVIDIA. I like Google as well. But all in all, guys, you know my stance. My stance has been the exact same all year. And buy the dip, hold, because the December seasonal period into January is going to be very strong. And I do think stocks resolve higher. I think the S&P 500 can see 7,000 without a doubt.
Guys, and diving into sentiment, this is the fear and greed index, and we are still in extreme fear even after all of the rally last week. But we are still in this extreme fear zone because there are a lot of skeptics of this rally. But ultimately, this is just fuel for the upside. And when we look at the seasonals, guys, the upside is very, very favorable. When we look at the S&P 500 after a 2% Thanksgiving, what can we expect? We can expect blockbuster returns. In fact, the month of December is normally up 1.8%, 11 wins, 4 losses. Really, really good data when you look at this in aggregate. However, the majority of the gains that do come actually come in the second half of December. The first half tends to see a little bit of volatility at the start. We get a bit of a pump, bit of a pullback, and then we actually get the move to the upside into the end of the month in December with an average return of 1.48% going back to 1950. So while we may see a little bit of elevated volatility here in the first half of December, that is completely normal. It normally turns around about the 15th, and that could coincide with a couple of key macro events. Number one, the Christmas shopping spree. This normally ramps up within the next 14 days into the month of December. And when we actually look at 2025 credit card spending, right, this is from the Bank of America versus 2024 and 2023, we are outpacing 2024 and we are on track with 2023. In fact, we were outpacing both these years very, very swimmingly. And this is not a nominal basis chart. This is a percentage return indexed to 100, right? So you can see right here that 2025, yeah, we have sort of parred or come into equilibrium with 2023, but you know, we were seeing very, very strong spending going into Black Friday. That bodes very, very well for the consumer. And when we look at federal employment tax receipts, it was really, really strong at 12.4%, but that's because we had a very, very weak October, negative 6.2%. So we clawed a little bit back from what we saw right here with this government shutdown. Now we're seeing 12.4% for the full month of November. Long story short, hiring still remains very, very robust, and we've snapped back. And yeah, look, October was pretty rough, but November looking really, really strong. Now, data for the rest of the week, tomorrow, Wednesday, the big data we're going to look at is the ADP employment change. We're looking for about 42,000. 42,000 is the previous. So yes, that is the ADP numbers. And the ISM services PMI, we're looking for a 52.1 right there. Those are the two big prints that we're going to be looking after. In terms of data, we get a couple of the dollar stores, Macy's and Dollar General right here. You know, that's going to tell us how the consumer's looking, but we know that the well-run operators, the consumer's doing really, really fine. Then after the close, we get Salesforce, Snowflake, a UiPath, a lot of the AI trade software names reporting tomorrow. That's really going to determine where software goes in aggregate, guys. But if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.